Good afternoon, everybody. This is Gary Follett, and I'm doing an update in the S&P, which shows some very, very nice schematic and trade setup to the market. It's something in which we look for daily, and this is a 15-minute chart of the S&P. And I want to show this as it's happening live, so we have an opportunity to benefit from it, right? So one of the things that we like to see in the market is some type of change of behavior happens to the market. And we see that here very easily in the fact that we see a reverse trend line or a shorting of downward thrust. So we see the market goes down here. We draw a line here across. This line is an oversold line called a reverse trend line that happens to the market. This is previous support. So as we go forward, we have an access line where the reverse trend line meets the horizontal support. It's just an oversold condition. So we wait for some type of change of behavior from an oversold condition to consider the market. Well, in this particular case, we have to get, this was a breaking of the ice or the breaking of the support area. So we consider the ice support here in the market. And the market breaks ice support. This support now becomes resistance. As we have some type of change of behavior from this reverse trend line, we'll call it RTL, reverse trend line, just an oversold condition, we can see the market grinding lower into an area of being oversold against this horizontal, against this reverse trend line. We then get some type of stopping action, increase in volume and length. We have a short cover rally. This short cover rally is going to meet resistance from the previous breaking of the support. We can see that the market does not run away from price. So here, from this level here, this is where buying overcomes selling. Buying overcomes the selling to the market. At this point, we can look for some type of spring or retest to be a buyer of the market. Well, we get this spring at this level right here. This is a spring, a penetration of a low, and closes higher. Now, it's far away from the danger zone, so if we will buy this, it'd be a very difficult buy to buy because our stop, we have to be down to here. But what do we know? We do not know that the market has an upward bias to the market. So we then want to look for a spring to buy the market. As the market's going up and up and up, the selling is abated. The red bars are abated, it's lower. And this is our entry point of the trade. The entry point of the trade, our first trade is at 11:15 on today, Tuesday, the 31st of January, 2023. We buy this particular spring, and then when the market goes back higher, since we're buying the market to a pullback, we are buying these other springs. Every time the market has a penetration of a previous low and close above it, we want this an entry point to buy. We place our stop under the low. It's our area. We put our stop under the low for protection. Not that close where we get jabbed out. And this is where the market then becomes one in which buy it. And this is in buy with a stop. So now we have a situation where we can move our stop loss back up to this area because this way the market, we can let the rally run. But we can see the higher highs, higher lows. The up bars or the buying bars are greater than any of the selling bars. This is an easy moving up, trend intraday up, and we want to look for some objective. We could draw a reverse trend line. This will take us all the way up to over 4,100. Right now we're at 40.67. So we can extrapolate that out. Yeah, actually comes about 40.80, correct? So not 40. So about 40.80 would be our access line to the upside, right? Why is that so straight? And that is our objective-wise to the market. The reverse trend line, this becomes an overbought line, and this becomes an oversold line. So very nice schematic of a 15-minute E-mini S&P that's happening live, but there's some upside room to go. There's some upside room to go in the market-wise as long as we don't get any supply to the market. So this is a 15-minute E-mini S&P. As a little of a bonus, I want to show you the daily chart, how it comes in very nicely today. On the daily chart, if we take that chart and we see the market here, we can see the potential of a spring market that will go to above the highs, or at least a retest of the 4160 area. So this also becomes a spring of the market. Penetration of our previous level and it closed above it. Remember, it's a daily chart. We have another spring that I mentioned as a buy. So this spring is a buy. Springs of bull markets, we tend to look to buy them, depending upon the characteristics of the background. Spring. Both these would be buy areas. We've established the up markets, and now we're looking for an objective to be up here. A retest of the previous high. And our stop loss is basically here and over here now. So we have a very good risk reward. So this daily chart looks very constructive. And I have an objective of 4175 to 4200. I have an objective in this area here for market. As long as we don't get supply to the market, this market should be in good shape for markup or run into the market based upon the cause in the background to the market. This is our objective. It's our spring. We push our stop under the spring and go from there. So that concludes a little mini session of the 15 minutes, even the S&P, as well as the daily chart S&P that could be utilized for a good risk reward type of trade today. There's a risk in trading all these things, but you can eliminate a lot of risk by placing stops and watching for supply.